Hello and a warm welcome to my YouTube channel. In this video, I've tried to compile and analyze the data, derivative data of all participants based on the closing of Friday, March the 17th. Remember, on March 17, we saw a dip and then some very sharp recovery towards the last hour and a half. So let's see how things happened and how all the constituents, all the participants have taken it going forward. Starting with the index futures, FIIs again added some shorts. So these are marginal, but compared to everyday basis, this is still there. And now we can look at their long to short ratio, the number of FIIs long versus the number of FIIs short in terms of contracts. It's now gone more than one. For every one contract long, there are 9.5 contracts which are short. So this is like an extreme level of short in the index futures from the FII side after a very long time. Extreme levels have been reached out there. The DIIs did some long unwinding, some of them, and some of them covered shops. Very marginal data from them on Friday. 824 net gross contracts have been reduced from their side. They've bought index puts while they reduced that factor. They've bought index puts and they have also shorted quite a decent quantity of stock futures, which generally means that a good number of them were bought in cash and they have been hedged going forward. They've also added some stock called shorting out here. So basically, cash buying has been adjusted from the domestic institutions out there. The prop desk, which normally does very similar things to what the FIIs do, are on a different path on Friday. Some of them went long. Well, double of that quantity has been covered in short. So they were going, remember, they were almost doubling their index shorts from 6,000 to 12,000 to 24,000. Then they slide down and then back to 36. And now they've reduced it by one third down to 22,000. This is a bullish sign from the prop desk right now. Clients, on the other hand, use that opportunity or in the morning dip to reduce their longs. And some of them who have been bearish in the market took it to cut off their shorts. But the ratio is very much more in favor of those reducing longs than going long. But they had been super bullish. Now they are not being so super bullish in the market. Now, before we go into the option law category, let's look at what the FIIs did on Friday. They were primarily adding shorts in Nifty Future, in the bank of Nifty Futures. They've added, but a very marginal long is there. Fin Nifty, Tuesday expiry, again, very small quantity impacting. But overall, the impact is at Nifty. They've been hitting Nifty. So we'll come to that aspect on why this could be a possibility and why we should not look at it as a very bearish signal now going forward from here. I'll come to that part. In the index options, the FIIs have bought more than they shorted. So this is another good sign. They've covered quite a decent quantity and 250,000 longs now in that. And look at this out here. While they have bought some puts, look at the large quantity of put shorting from their side, which has taken place. Very high number out here. And now the net figure, net ratio of long calls versus long puts has gone below 2. So instead of 1:2, where we had seen 1:3, 1:2.5, is now gone below 2, which is again a bullish sign from the option point of view that their aggressive bearishness has come down out here. Now let's have a look at what the prop desk did out on Friday. The prop desk reduced their aggressive bearishness. Remember, on Thursday closing, before the start of the weekly expiry, they had a huge amount, which they now have reduced because they went, quite a bit of them have gone large quantity long uh, and less than that short on Friday. And on the option side, put option side, they marginally added put shorts. They've not done an aggressive put shorting out here. Marginal puts have been shorted out here. That's because it's quite uh, practical because of the way the index has fallen, and we've had doji, so we haven't had a major reversal confirmation. So it's they've taken caution by not going aggressive put shorting right now, while the clients have they've gone aggressively bearish on the option side. We can see out here that from 14,000 contracts approx, they have 1,30,000 contracts short. Now, out of this, there are many clients in this figure, which you can say, who must have done a one long versus one or two, either one or two calls short. Some spreads must have come out here, but overall, there's been more calls shorting from them on Friday, and their overall figure is minus. So the clients from there are mildly, some of them are bullish, but most of them are not seeing a huge move happening in the expiry. Some of them are bearish, which is very normal in our market. The On the put side, the clients have gone and reduced their put short exposure from 5 lakhs to 4 lakhs. Remember, this was going huge. So in that move which came yesterday, where the puts have melted considerably because the in volatility came down, IVs were melted a bit, and there was a sharp put decline. A decay in the put premiums. So some have booked out on their profits out here, while some have added put shorts. So that number has come down considerably from what it was. So on every rise, they seem to be turning from ultra bullish to mildly bearish as of now, the client segment. Now, now let's look at the stock futures out here. In the stock futures, why I said that we will be looking at this or not exactly as a bearish sign of 8,000 contract short in the Nifty is this part, that the FIIs have reduced their shorts in stock futures considerably, 11,000, even though they have reduced their longs also very, very marginally out here in stock futures. And the figure overall is still not very great. 45,000 net long is not super. But what it suggests is that where they are long in futures, they might have hedged this with a short Nifty, where, in certain stocks, they must be having a specific bullish account, but because of the uncertainty in the market, this is one interpretation I have, that it's a hedge trade of long stock, short Nifty future from them, the ones which have happened on Friday. I could be totally wrong in this assessment also. It could be a clear cut short from them because, we saw global cues on Friday to be weak. Maybe that segment of the FIIs are bearish in the market, but that one interpretation I'm looking at is based on their index option trades, and this tells me that this might also be a hedge for their longs in uh, stocks, the index future shorting from them. Now, the prop desk has added short futures, stock futures short out here. So while in the index, the prop desk is looking at a bullish scenario, in the stocks, they are not looking at. So even in the index, the prop desk still has a decent quantity of index options short, but comparatively not so much with the put side. So they are also not expecting too much on the upside while they covered the stock futures. But this definitely is something, maybe they don't want to hold on to those stock futures. They are specifically bearish on certain stocks, which could be a particular sector or some stocks where they've done this out here. Now, looking at the clients, massive quantity of longs further added from them. They keep doing it compared to the shorts added. So for every three clients going long, that is people like you, me, and everyone else in the retail world, one client is going short, 3:1. So they remain bullish on stock futures. The stock outlook of clients remains bullish. In the in stock options, we can see that there is marginal reduction of stock calls short from them, good quantity bought fresh out here. Well, they've also not done a gross short in puts out here. So again, FIIs, this is again a story of the FIIs that they've reducing their bearishness in the stock options, but marginally. It's nothing exceptionally great, but it is there. In the from the prop desk, we are seeing a considerable amount of bearishness continues from the prop desk on the call side with just 2 weeks to go for the settlement. So they are probably trading this for a full decay of stock options in their side. They've also, gone short in a marginally short on Friday in stock puts from what they held. You see the large quantity, 10,000 stock put shorted, 6,000 uh, stock puts long. So again, this could be a 1:2 put spread from a bulk of them. But it just tells you that they are also looking at some decay happening on the put side. That's why a 10,000 quantity puts have been shorted from them there. Clients continue to be very bullish. Some clients have bought puts, so there has been some put buying. Clients are divided in this segment, but they're always like, perpetual bulls are out there and they keep adding stock long bulls with 2 weeks to go to the expiry, the settlement right now. For Monday, March the 20th, the support for Nifty comes in at 16,950. And if that does not hold, then it comes down at 16,775. While the resistance comes in at 17,250 and above that at 17,400. For Bank Nifty, support comes in at 39,250. If that does not hold, then 38,900. While the resistance comes in at 39,900 and then at 40,300. With that, I complete this video of this one. I hope it's of help to you. Please don't forget to like, share, and subscribe to the channel. And have a great week ahead of you. Bye bye, everyone.